Hello, everyone. Bonjour, good morning, good afternoon, good evening, depending of which time zone you're in. Welcome to this first joint seminar between Levio and DAB. Uh, I will. There's a few people that are joining, but we will start on time. My name is Frédéric Brosseau. I'm partner at Lavio, responsible for the process intelligence practice. I'm happy to be meeting you today with Shilpi Shawa, who's our co-lead at Lavio of the SAP practice. And we're super honored to have two people from DAB, our European software development partner, Philip Kenk and Johannes Schwelle, who will be presenting with us this exciting topic of SAP analytics. For those of you who don't know Lavio, we're a North American company, very fast-paced, fast-growing organization. We were founded about 10 years old, and we are now about 2,000 consultants that are working across North America, but also we have offshore centers in Morocco and India to support our clients' offshore needs, both in English and French. Um, I will let Shilpi introduce you to our SAP practice. Most of you today are SAP customers, and Lavio has an extensive SAP practice that Shilpi will just give you a quick introduction to.
Thank you, Frederick. As you mentioned, I'm the co-leader for SAP practice at Levio. We started this practice around 2 years ago, and now we are the SAP Silver partners and certified resellers. We serve in more than 20 areas, including SAP S/4HANA implementation, Concur, SuccessFactor, Ariba. We have a very strong project management and governance teams. We are the preferred system integrators for most of our customers. We have various customers like Kruger, Hema-Quebec, Pharmascience, SAEQ, CCQ, just to name a few. We build and deliver digital and innovation roadmaps for our SAP clients by addressing their business and technological needs. We have a global capacity of over 150 people in North America, India, and Morocco, and we are growing too fast. Yeah, we can move to the next slide. Thank you, Fred.
Cool. Thank you so much, Shilpi. Um, whenever almost all of our customers that are using SAP love the platform, but a common challenge is often to get information, get reporting, get insights out of SAP. And this is where we're super happy to have partner with DAB. I personally started working with DAB 3 years ago, and they have a solution that enables any SAP customers to extract the key data out of SAP and save it into an SQL server. And from there, you'll see today that there's a number of analytics report. The one that we will be focusing most today is detection of double payment, but there's a whole suite of reporting that are there. At Levio, we are able to augment these reporting capability by merging the SAP data with any other data that your organization may have. So that could be Salesforce, that could be ServiceNow, any other custom systems. And in addition to the SAP analytics, our process intelligence practice can help you do process mining of your SAP data. And we have partnership in that sense with a number of leading process mining vendors. So we really can help you leverage the SAP investment that you have in a convenient fashion. To this end, we will focus on the main topic of today's presentation, which is the DAB solution to extract data and do reporting out of your SAP infrastructure. Philip?
Yeah, thanks for the very nice introduction, Frederic, and also warm welcome from my side. Bonjour. And yeah, I'm going to start a little bit as we haven't done so many webinars. As Frederick also said, that's our first common webinar together with Levio. So let me first introduce you a little bit to our end-to-end data analytics solution before we go into the content itself. So if we look at a life cycle of data analytics, we start in your SAP system, or we can also call it in plural, SAP systems. With the end-to-end platform, which is called DAB Nexus, we are able to pull data from your system or systems, analyze it with the so-called DAP Analytics Suite. That is more or less the content around the whole SAP stuff. Everything is predefined, so we don't need any scripting. It's just a few clicks inside the software, a few pushes of some buttons, and then the analytics run and deliver you results, which can be distributed in many ways. I mean, you all know once data is in a SQL server, you can make usage of the whole Microsoft environment, Power Automate, Power Platform, and so on and so on. And from there, you can also pull data to Tableau, to Power BI, to whatever you like, and share the results with the right people. And we have a small tool which also helps you by following up the whole results, the so-called DAP link I will show you later today, which offers you a small link inside of all analytic results we offer. And when you click on this link, you jump directly back to the correct transaction in SAP, where you can see the invoice, the purchase order, or whatsoever popped up in your analytic result. In today's webinar, we focus a little bit more on the predefined cashback analytics, as Frederick already told us. We'll focus a little bit on duplicate payments and duplicate credit notes. And then I will show you some more ideas on how you can find some money maybe in your system. And a very important topic is, I mean, just finding cashback opportunities in your system is one thing, but you also need an efficient follow-up process which you can make usage of. Because if you don't follow up potential cash losses, I mean, the cash will be gone. So let us have a look at the cash recovery as well. But first, let's ask ourselves the question, how do cashback opportunities arise? So how do we lose money? And first, let us do a definition of what a duplicate payment and a duplicate credit note is before we go to the reasons why these duplicate payments or credit notes arise. So that skyscraper in the middle, that's our company. And as every company, or almost every company, we are working on the one side with vendors and on the other side with customers. So we sell some stuff to our customers, but we also need some goods, services from our vendors. And usually the vendors send us goods, and after we receive the goods, we receive an invoice as well. Then we pay it as we are a good customer for our vendor. But sometimes there might be a reason why that invoice pops up a second time or whatsoever, or we find the invoice again, scan it again, and then it's paid a second time. So this is a duplicate payment. For the one invoice we get, we do two payments, which doubles the amount of the payment. On the other hand, what is often forgotten is that also to our customers, we have some financial transaction, not just that the customer itself sends us money, so he pays for the goods he receives. And it might be that he overpays us, that he sends maybe one or two things back, and so on and so on. There are multiple reasons why we should send out a credit note. And similar to the duplicate payment, it is also possible to issue a credit note a second time. And as well, this can be a potential money loss if we issue the same credit note twice to the customer, as he should only receive one credit note. Now you might ask yourself, yeah, but we have SAP, and in SAP there's that nice checkbox on company code level where it says, okay, please check our invoices if there are any duplicates. So we should be safe because we have SAP checking this for us. Yeah, that might be something, but there are a lot of things in SAP which yeah, you should take care of, even though the system itself might say, yeah, it takes care of. Also, there are a lot of reasons why duplicate payments might occur. And I have made a list. This might not be the full list. There can always be other reasons depending on more or less your processes and your company itself. But what I see mostly when I work with customers, and I've done a lot of implementations of duplicate payments, I've worked through duplicate payment lists with my customers together, and we looked, okay, why did something happen, etc. And one of the most reasons I see is that your master data quality is very poor. And the poorer the master data quality, the higher the potential that you might pay someone double. Let's make an example. Me as DAB, we are now working with Levio. And Levio, you should all know how to write that company. And maybe someone from our side got it wrong and thought it was Levio with a double O in the back. So we have one time in the system Levio and one time Levio. And now we get an invoice from Frederick as he did some services for us or whatsoever. And I have a colleague getting that invoice, booked that invoice, pays the invoice, all fine. Then she puts the invoice back. Another colleague checks it, misspells the name Levio, looks for Levio with a double O, and sees, okay, there hasn't been any payments to Levio. We should pay this. And then a second payment is issued to the wrong or to the duplicate company of Levio. So a master data duplicate can easily lead to two payments to the same company. And this is an important fact, SAP is not checking the invoice numbers overall in the company code. It only checks whether for this one vendor there has been an invoice with the same reference number, but not over more than one vendor. So poor master data quality can lead to a lot of duplicate payments. Then there can also be software errors. For example, if you have a system which works upfront, which scans you the invoices and so on, and then pushes the information maybe as a batch into your SAP system, then there might be a downtime, so it crashes and then it's restarted. And sometimes it might be that it starts exactly at the same invoice a second time. So that invoice gets pushed into the system a second time. And if you have ongoing invoice numbers, that might also not be seen easily. And especially if you have a system which works upfront, a lot of people trust these systems pretty much. And so there are not that many checks to the predefined systems and the process. What we also see is that a lot of companies have some process weaknesses. You can, especially when you're restructuring yourself, maybe you're about to get a new shared service center, or what we have seen also for one of or a big of our clients, a big one of our clients, they were switching from postal invoices to electronic invoices, to e-invoices. And they had a lot of subcontractors who did services for them. Short services, they came to the houses, did something, had a fixed price, issued the invoice. And then when they wanted to switch from postal invoice to e-invoice, they said, okay, please send us an e-invoice, but we want to be sure that the system works, and sometimes we're not very happy with the process it is. So can you please also send us your invoices on the postal way? And what they did is, in a lot of cases, they paid the e-invoice and the postal invoice. So here we see the process was poorly organized and no one checked up whether there has already been an e-invoice. And as they had a fixed amount, they were not that easy, or it was not that easy to check whether that amount has already been paid, because that fixed amount has been paid to the same vendor very, very often. Also, as usual, it might not just be that there are process weaknesses or that something just happens because of poor master data quality or weaknesses. Sometimes there's also like fraud or fraudulent behavior in the back. So there might be that someone maybe works together also with the vendor and they share the money loss you get, or someone puts himself in and whatsoever. So duplicate payments, credit notes, etc., can also occur due to fraud. And last but not least is also a very important thing, especially when you and your company is a little bit bigger. Imagine you have different company codes doing similar things, but one does it maybe for Canada, one for the US, and you also have big clients, and then you send one invoice to the company code 1 in Canada, and then you realize, oh, wrong company, I should invoice or I should pay to the other. You get a second invoice for the company in the US. And as in your invoice department, company code A cannot see what company code B does. The US company code pays the invoice, and the Canadian does it as well. This can be due to missing visibility, and a lot of reportings are done per company code and not overall for similar things. And if you have maybe split your processes among several company codes, the risk might even be higher. So we see that there are a lot of reasons why duplicate payments or credit notes, the reason is similar also on the other way, might occur. And as there is a big possibility of money losses, you should do something against it. And therefore, we have the analysis of duplicate payments. We have been analyzing duplicate payments, I think, for almost 20 years now. And when we look back at 20 years ago, AI, artificial intelligence, I mean, it was already a buzzword, but it was not that usable. No one really took advantage of it. So we started with the so-called KISS principle: keep it simple and stupid. What does it mean, the KISS principle? You try the most easy way with filtering, etc. You try to figure out what is a duplicate payment and what not. And maybe let me show you why this is not always working properly, because sometimes it is harder than you think. I have an example of an invoice which is posted twice in the system. And the KISS principle would say, let's check for vendor name and invoice number. So the first two lines that we see that we have for our company code 1000, we have an invoice number. We have a vendor, which is the same. So we have an invoice, $200, graphic design consultation. same vendor, same invoice number, same account amount, same item text, same fiscal year, same company code, all the same. We might look this up into the system and find, okay, it is actually the same invoice posted twice. But if we are now looking on the second tuple of this table, we see that we have an invoice number and we have the same vendor, A&A Properties, who booked the same amount, $13,403. But then when we look closer in the item text, we see this can be a bill for March, and the others is a bill for the rent in April. So even though the vendor, the amount, the invoice number is the same, and the invoice number in this case is the contract for the rent, it is not the same invoice. And what does it make with our KISS principle? So where does it lead to? And this is something we get from experience with our customers, where we tried the KISS principle for the last 20 years. When you find 11 duplicate payments with our analytic, one is an actual duplicate payment. So that one duplicate payment saves you some money if you follow up and get the money back. But 10 out of these 11 duplicate payment results are no duplicate payments. And that means that for finding one duplicate payment, you have to search 10 times more invoices in your system. And that makes the process quite inefficient. And you all know this. If you have a lot of things to look through and less time because due to daily business, etc., the motivation is low, and also maybe you won't make it to the whole list of potential duplicate payments. Also, what we see is that it's not so easy to just look at vendor and invoice number. There are also other things you should consider when looking at duplicate payments. So are there maybe different vendors? The poor data quality example I already showed you earlier. Does it have an equal posting date? If no, okay, so maybe a second invoice occurred and it was posted a second time later in the process. Does it have an equal document date? So is it the same invoice with the equal date, or was one payment done to the actual invoice and maybe the second, the duplicate payment to the dunning document? Then do we have equal paying company codes? Do we have different paying company codes? Are the references equal, or do we have to clear the reference because maybe it's ENV for invoice upfront, someone writes ENV before, or INV, not ENV, before the actual reference number. The second forgets to write INV in there. So a lot of things you should consider while using the analytic. And that's why we said, okay, the KISS principle, that works, but it gives us a high number of false positives. But on the pro side, so the pros of the KISS principle, it's pretty fast and very easy to do at the first place if you know what you have to check for. And then we were thinking, how can we improve our analytics so that not 1 out of 10 or 1 out of 11 is a true finding? Maybe we can higher that relation a little bit. And there, especially my colleague Moritz, who's our data scientist, developed an algorithm with some AI algorithms, which supports our KISS principle in the duplicate payments analysis. So let me show how this is working. The duplicate payment analysis, as it is being run as usual. So you run the duplicate payments, and then you get all your potential duplicate payment results. As we saw, this is the one where you have 1 true positive and 10 false positives. And then Moritz developed an AI algorithm who runs over this, tries to find some patterns, etc., and tries to figure out what is an actual duplicate payment and what isn't. So no duplicate payment or true duplicate payment. Yeah, that was the first intention we had. And we saw, yeah, we might already get a better relation, but we are not able to find out easily whether you and your company has some specific issues. And that's was then that we said, okay, we need something, an AI, which needs to be trained, because for company code A, or for company A, the reasons for duplicate payments might be totally different than for company B. And this is where you or your colleagues, the human being, comes into the game. And this is the user evaluation, is a very important point in that process. So from everything which the AI cannot actually, or which says it might be a true duplicate, the user says, is it actually a true duplicate payment or is it not? And that training pool will then be played back to the AI. And the next time the duplicate payment analytic is run, the potential duplicate payment results are on your server. The AI takes the knowledge it has gained from the training pool, from the user evaluation, and then figures out, okay, from what I learned, this time I say these might be the duplicate payments, and these are the no duplicate payments, so the false positives. And with that process, so a supervised learning algorithm, we are able to find 70% less false positives in your results. That means we can minimize the effort of the false positives by 70%, which is a very, very large number. So that means when we look back into our 1 out of 10, we can say 10 minimized by 70%, that's only 3. So you only have to look for 4 findings or potential findings. And inside these 4 potential findings, you will find 1 duplicate payment. We can reach this when you have 500 labeled duplicate payments. Then the supervised algorithm seems to know a little bit more about your process weaknesses, has found some patterns, and gets better and better. So what we have learned over the time is that with conventional data analytics and AI methods, we can make the process of finding duplicate payments or duplicate credit notes more efficient, so you can find the same money or more money in much less time. And that helps you having efficient processes and finding also the money losses quicker, so that you can get the money back faster. So let me sum this up for you, how the process looks like. We run the duplicate payment or duplicate credit note analytic, and then based on the training pool and the AI learns out of all the labeled results which you have. And the labeling is done by you as a customer. So each customer labels their own analytic results, so that you get your own trained AI for your company, which learns about your process weaknesses, maybe about your master data quality, etc., etc. So the data pool itself is continuously growing, and the number of false positives is steadily decreasing, and that's a big advantage of that supervised AI. And we see this especially helps financial departments, internal controls departments, SOX compliance departments, however you might call them. Now I've talked a lot about the analytic itself, but in the beginning I also told you that the follow-up process is a very important one. On this screen we can see that our DAB Nexus is running duplicate payment analytics. It runs maybe once, twice, or how often it might run, we don't know. And what it gives you, and now we're using Microsoft Lists, which is the former SharePoint lists. With Power Automate, we can fill these Microsoft lists, and you're able to label the duplicates. So here we see we even had a triple, which were true positive, which we labeled. And what we should do now is we want to label these two. So what we do, we click on the link, which is provided inside the analytic, and then the DAB link, our small piece of software, leads you to the SAP system, where you can then compare these two different invoices. And here we see the document date is one on the left side in 23. Here it was in 2022. So maybe we were just ordering the same stuff, but 1 year ago. That's why we still have the same document or the same amounts, the same stuff delivered, etc., etc. So this invoice, and we could also click on more, get the actual invoice if we upload it as well. And then we might say, okay, this is not an actual invoice, a duplicate invoice. This is fine. And so we label this inside Microsoft Lists as a false positive. And now in the next run, that Microsoft List information, so more or less only the status, is pulled back into the training pool and the AI learns. So Microsoft List is included in almost everyone's Microsoft license, which you already have, and also the Power Automate. If you have the E5 license, there's no additional cost for you for using Microsoft Lists and Power Automate for following up on the duplicate payments. Yeah, that's a short introduction of the follow-up process. Follow-up process is also something which already contains something which is important. So how often do you want to do this? What kind of interval do you have in between the follow-up processes? How frequent do you want to run and check your duplicate payments? And therefore, we need to find the right data strategy for you and your company. And this is also something which is forgotten pretty often, because some people think, okay, now I have a duplicate payment analytic. I just go inside my duplicate payment. I click on run, then it goes, and yay, I have my duplicate payment results for the last years. Then you maybe have looked for the last 3 years, and then you give it to the financial department. And these are hundreds and hundreds of results, and no one is able to go through and get the money back. Therefore, we need to build ourselves a data strategy which fits our needs. On the one hand, we have to decide what is our extraction period versus our analytic period. If you think of, a lot of people just say, okay, I run the analytic last month, then I get all the duplicate payments from last month. But a few minutes ago, I already told you that there is also the possibility that one payment is made to the actual invoice, the other payment is done on the dunning document. You will never find this mostly in the same month. Because usually you get an invoice, you pay, and then maybe your vendor cannot connect your payment to the right money on the bank account. So what does he do? He sends a dunning. So a month later, a dunning comes, and someone else from the financial department also transfers the money on the dunning. You will only find this if your extraction period is much larger as the periods you look for the actual duplicate payment. Also, you should take care of what frequency. The longer the period, the more you have to go through at once, the more results you have to go through at once. The more often you do, the less you have to check, but also you need always people who are there when it needs to be checked. This is something where you should take care. Do I have an own team, or is it someone else doing who has also like his main business he should take care of? Then also like the data scope I've already talked about. So it might be that company code A pays for company code B and vice versa. So you should also think of what kind of scope are you having a look at. Work off capacity is an important thing. If you have no one who can check it, it doesn't make any sense to run it. And last but not least, prevention or detection. That's a question. If you have if you maybe do it every morning, you check for the duplicate payments of the last day before this is been given to the automatic payment run. Then that detective analytic might become a preventive analytic. And so you can see with the right data strategy, or with every data strategy, the focus is a little bit a different one, and also the process in the background is different. So depending on your company code, depending on your company, it is important that you think of what do you want to achieve with the duplicate payment or duplicate credit note runs. And now, as I've talked about a lot about all the duplicate payment and duplicate credit note stuff, let us have a last look at cashback opportunities, which are also there and possible by finding through simple data analytic steps. In the European market, and that might sometimes be that if you're dealing with European customers, there are so-called cash discounts. That means if you pay pretty quickly, you might deduct a so-called sconto from your invoice amount. These cash discounts can help you on your if you're paying earlier to deduct something and that you get some rebates, some cash discount, but also if you are not paying fast enough, you might lose some money at that possibility. So this might be a thing, especially when you deal a lot with Europe, where you could save some money. Also, and this is something which is not easy to find out in SAP, pricing and conditions. I don't know if you have looked at the pricing tables in SAP, they're heavily large. It's a very complicated thing on how you calculate prices for your offerings. And therefore, some standard analytics might make sense where you find out what kind of pricing, what kind of conditions are chosen in your offerings, and also where did we have any changes on the pricings and conditions, where did maybe someone change it so that we might lose money, but a sales guy or a sales lady might make some quick sale and get some good money out of it. Then also something you should take more often a more closer look at payment and Incoterms. The payment terms might lead also to deductions like the cash discount I've already talked to you, but also the longer the payment period is, that might be bad for your cash flow, and you might be, especially for bigger deals, you might need to go to your bank and ask for a credit, a short-term credit, so that you keep your liquidity up. On the other hand, the so-called Incoterms, they have heavy impact on your costs of freight, on your costs of insurance. There's a big difference if your customer picks up the goods he orders directly at your warehouse, or if you have to ship it to wherever it might be, half around the globe. That can cost you a lot of insurance because the longer the goods stay in your environment and in your trucks, on your ships, in your containers, the more you pay for the assurance. On the other hand, if you have like a fixed price for freight, this can also be something that you are paying freight costs which are not covered by your contract. And last but not least in this list is that there is also a possibility of sending out free of charge products. This is something we see in a lot of at a lot of customers, that if a sales guy is not able to give some more discounts, maybe just put one or two free of charge products to the whole order, and then yeah, it is like a discount, but it will not be seen easily on the invoice and in the pricing and conditions itself. So not just duplicate payments and duplicate credit notes might save you some money. There can be also other analytics from our portfolio which help you to find some other potential money losses. Yeah, now I've been talking for quite some time, and before I come to an end, let me just quickly summarize what I've been telling you in the past 40 minutes. So there is a large number of potential monetary losses, and these losses can be easily minimized by data analytics. You will never find that many possibilities and opportunities to find these money losses when you don't use data analytics, because the number of invoices, the number of orders, the number of credit notes is just too high to manually go through the whole process and find yeah, the one which is a duplicate. Beside data analytics, the artificial intelligence can support you with minimizing the effort of finding potential money losses inside your data analytic results. So what the AI supported analytics do is they offer you a possibility that with less resources, you can get even more money back in a relation. Also important to think of is the right data strategy. So depending on what you want to achieve, and also depending if you're not taking the right time frame of analyzing or the right scope, you will not be able to find all the money losses you could find. Also, what is important is do not just look at duplicates. Also, other opportunities of getting money back are in your systems. And last but not least, do not just use data analytics to find the money losses. Also try to use the data analytics itself to eliminate the possible reasons. So for example, the poor data quality or the process issues. And especially here in this case, Levio is a very good partner when it comes to process mining, etc. Yeah, there was a lot of talking from my side, and you want to know how you can make this all happen. And therefore, we have a so-called proof of value where my colleagues from Levio will tell you now a little bit more.
Thank you, Philip. Yes, so for all of you who want to try the solution to see like this is interesting, but is really work or not for us in our environment. We have come up with this very simple plan. And Shilpi, if you could please explain to it what this means for you and which kind of effort that would it require for you, Miss customers? Oh, you're on mute, Shilpi.
Oh, I'm so sorry about that. Thank you, Frederick, and thank you, Philip. So now, since we've all seen how double payment analytics could bring the cost savings to gain competitive advantage, we would invite you to do the proof of value assessment with us. It's quite simple. Simplicity is bliss. So DAB has a broad catalog of analytics. So with the assessment, you could choose up to 20 analytics that is best fitting to your organizational needs, audits, and control works. It would take 2 to 3 days to implement. We have done it with our customers before, and with the help of the IT department and with our support, it takes half a day to implement it. And you would have the access to the reports as well as you would have the DAB for the next 30 days. The prerequisites are quite simple. We need to have a contract that must be executed. As we said, we would be able to help you with the technical setup. So we would need an application server, a SQL server, a SAP RFC connector. So we would provide you all the manuals and IT support that needs to be there to make this happen. We would need the DAB application would need to have the access to the SAP account to be able to take the SAP extracts for last 1 to 2 years, depending on your organizational needs and policies. It's really beneficial because you would be able to carry on seamlessly with the system and analytics work even prior to going with the licensing. It would already be done. The implementation is there. You would be able to choose the best fitting analytics. Double payments could be one of them. And you would get the first hand benefits from your analytics already prior to the licensing.
So the big question is how much would that cost?
Yes.
And the package that we come up together is, if you want to just move the slide. So we are proposing to do this proof of value with you for a fixed fee of Canadian $9,500. This would include the licenses for 30 days and then our support both from technical and business side for that period. If you download a year or 2 years of data, if you have like $10 million or over of spend, we're quite certain that you'll be able to pay back very easily based on the double payment that you've done, and then you'll be familiar. In addition to the business saving, you'll be familiar with the platform and the other analytics, and you can see if you want to implement it on a permanent basis in your organizations. So that's our proof of value. We wanted to make it as simple and as low risk as possible for you. And that said, if you're interested, you will have on the next slide our contact information. But before we do that, we're
Here's the contact
open.
information.
Yeah. So we have the contact information. Like many of you know me, you can like take a screenshot of this or go. That will bring you to my LinkedIn profile. But you have my email and phone number, and we want to make sure that we have an opportunity to entertain any question that you may have or feedback if in your organization this is a challenge or do you see it applicable or not. Open to questions and or comments with the audience.
Correct. If you have questions, there's the question and answering stuff on the top of your screen, so you can send whatever you want to know to us, and we might answer it directly. And if not, we have already some questions, I think, from yesterday, right, Johannes? Which we talked about yesterday. We already did a webinar for the European market, and there were also some questions. We might maybe pick up these in the meantime.
Yes, I think to remember there was one question when a payment is done in 1 year and the other one in the next year, how could it potentially still be a duplicate payment?
Correct. What we have seen is from our experience that a lot of duplicate payments occur when there is some time or when some time passes by in the meantime. So as I said with the dunning, so you pay your vendor and maybe the vendor doesn't notice, the SAP system cannot connect the incoming payment to the right invoice on their side. Then they might go into the dunning run and then you get dunned. And then someone looks it up and doesn't also find it on your side because something happens. And then the dunning is paid to not get any charges for the dunning. And yeah, so usually during these two documents, the actual invoice and the dunning document, there are quite some month or days, depending on the payment terms, of course. And we have some payment terms which is like 180 days net, and then you can imagine you get your invoice, and after 180 days you will get the dunning, and this can already be the next fiscal year. This can be a total different period, and so although it is in different periods, years, etc., it can be still a duplicate payment.
Yeah, then I remember another interesting question about the data strategy that you would advise to use in the terms of a duplicate payment analysis here.
Mm-hmm. So how I will always start when trying to find out the right data strategy for you as a company is I would not just say, okay, we just take data strategy A that works for all companies, because sometimes it doesn't. I would at first have a look at your company, on your company structure. So do you have a lot of shared service centers, and is everything strictly separated? We can find this out by just having like one extraction over a certain time period for your whole group, and then see, do you have a lot of payments where company code A pays the second or the duplicate payment for company code B, and vice versa. So if you have these, we need to find a data strategy where we can grab more data from all your organization and not just like maybe per region or per shared service center. If you see that you don't have any issues, that maybe shared service center A or company code A pays for company code B, then we can have a smaller scope. So maybe a little bit more runs, but on different scopes, so that you can give the results to different people with less visibility in the system, who can work this up a little faster. Then we need to find out how often do you have payment runs in your company code, in your company. So do you have it like on a weekly base? Do you do it on a daily base? Do you even do it multiple times a day? So how often do you transfer money through your bank? And if you say it's not so often, so maybe every 2 days, then we might be able, depends a little bit on the amount of data you have, to run the duplicate payment analytic in between, so we can stop the money from leaving your bank account, from getting from a potential loss into a loss. And this might help by getting the detective analytic into the preventive one. But this is something which can be done all in the proof of value together with a team from Levio, where you figure out what works best for you and for your use case.
Thank you, Philip. Then I would have a last question towards Frederick. Frederick, I guess you will follow up with the participants and they will get the slides. Am I correct here?
Yes, absolutely. All those who registered, we will send a copy of the material. Some of you may have connected through LinkedIn directly, and we don't have your registration. If it's the case and you would like a copy, just send me a note. If maybe we can switch back to the contact page. If you didn't formally register to the event, you have my contact information there. Please send me a note and we will make sure to send you a copy.
And we also recorded that webinar.
Mm-hmm. Yes, we have the recording that we can share as well. Correct.
Exactly. And if there should come any questions, technical wise or methodical wise, please reach out. We are always happy to answer them.
Cool. Well, thank you very much, DAB, for joining us to this event. I hope that everyone in the audience learned about how double payments are taking place, and now we have an option to add value to your organization by having a proactive way to detect it and prevent them from happening. Thank you very much. Have a great rest of your day, everyone.
Thank you so
Frederick.
much.
Thank you
Bye-bye.
for having us.
Bye.
Bye-bye.
Bye.